next episode of Hidden Gems. Here I'm with two special gentlemen from the Nabu project working on a very exciting NFT valuation and analysis project. So gents, please introduce yourself and tell us about Nabu.
Hello, everyone. Thank you, Ganesh, for having us here. Really pleasure to be speaking on the Hidden Gems podcast. My name is Timur. I'm the CEO and one of the co-founders of the business. Before I started the business, I was quite active in the Web2 space. I scaled and exited 2 companies there. And actually, during my second startup, I met my co-founder, Ricardo, with whom we started Nabu. We were building a fintech company at the time. And after we sold the business, I took some time off from entrepreneurship, and I'm a huge gamer. So I started playing with some of the games that I missed out on. NFTs were at the bull run at the time. This was 2021 summer, so NFT summer. And you had games like Axie Infinity, Phantom Galaxy, Illuvium. So I bought into a couple of these assets, and quite quickly I started thinking, you know, it's great that I own these NFTs, but what can I do with them? Could I lend it out? Could I rent it? Could I get an insurance against it? Because some of those were like really high in value. And so very quickly, I realized that I know nothing of the space. So to get a deeper understanding about Web3 and NFTs, I became one of the co-organizer of NFT Club Berlin, which actually since then became the biggest NFT community in Germany. And so through hosting lots of hackathons, meetups, and conferences, I've really understood where the industry is heading, what are the main barriers to entry, how we could solve that. And that's how Nabu got started. Ricardo joined me as my co-founder on this business as well. He has over 20 years of banking experience. He was actually leading the exotic asset class divisions of different US banks. So he really knows how to, look at exotic asset classes like NFTs. And Diederik very shortly after joined as our chief data science officer and third management team member. Diederik, would you also like to share a few words?
Yeah, absolutely. So yeah, fantastic to be here, Ganesh. It's really exciting to be on this podcast. I'm Diederik. I'm the Chief Data Officer at Nabu. So I'm actually responsible for like the machine learning models and the valuations and the deep data products that we're building on top of those. My background is 16 years in astrophysics, where I specialized in extracting extremely low signal to noise signals from huge data sets. Turns out that is pretty much what I do today. So it's actually been great fun in that sense. And in the astrophysics space, I was very active over that time. I published over 300 papers, raised all kinds of different grants, but I've always had a very broad range of interests, got interested in the Web3 space from both a sociological and a technological perspective a couple of years ago. And at some point decided that I really wanted to move in sort of the forefront of innovation, be challenged in the broadest sense possible.
Amazing intro. Diederik, I have a physics background as well, but I would not say that I'm using a lot of those skills I picked up in my previous part of my life in my current role. But it's great that you've been able to basically transfer those skills. So let's talk about the core problem you guys are trying to solve. Why is pricing valuation of these exotic assets so compelling? Why is it such a pain point? Why is it a problem even worth solving?
Great question. And I think before we dive deeper into the actual use cases and why we really see valuation is very important to the space, I think it's important to understand how we actually found this problem. And at the time when we launched in 2022 March, our value prop was very different. And I saw quite a few barriers to entry, and those are still a problem today. And they are things like the fact that if you're a newbie coming into Web3, it's really hard to get started. You have no idea what kind of assets to buy into. You have no idea how you can actually purchase those. After you start navigating on OpenSea, you might get scammed a million times. You get hacked later on. And it's really hard to keep on top of all the NFTs and the collections that you own. You have to constantly be online, jump between OpenSea, IC tools, Twitter, Discord, and there's a lot of noise out there. And so our solution for this was a platform where we wanted everyone to be able to connect their wallets to. We wanted them to provide insights into all of the collections and the NFTs that they own. We wanted to provide them similar financial services that are available for traditional asset classes. So we wanted you to get a loan against it, to get an insurance for that NFT. And so as we started building out this product offering, we've gotten, much closer to the Web3 ecosystem on the entrepreneurship and protocol side. And we started speaking with a few NFT-Fi companies, which were doing loans, insurance, and other financial services. And all of them were signaling to us that, it's great that we're solving these retail problems, but if we, take a step back and if we look at financial services for NFTs or NFT-Fi, it's really complicated to build effective services currently because there's no clear valuations for these assets. And even if we look at traditional markets, it's very important that you have an underlying valuation for any asset before you're able to build financial services on top. And so that was the kind of aha moment for us when we saw, okay, it is a really big problem where there is no transparency, there is no clear understanding of where the value is coming from for an asset class. And that's when we decided to focus only on this problem. And since then, we've been growing in many different growth areas. In terms of why valuations are very important, I think, that's something we discuss very actively within the team. And maybe Diederik, you can also share, a few of your thoughts on that.
The thing with NFTs is, of course, is that each asset is unique, and they're not just unique. These assets are extremely illiquid. Often, like a token is sitting in somebody's wallet for a very long time, over a year. And because each asset is unique, there is no liquid ongoing market to define fair value for each of these tokens at any given moment in time. And that is the big challenge, is you don't really know at what price you should be selling a token or purchasing a token. Within the space, of course, there are solutions that are being pushed forward, like, for instance, the floor price, so the lowest ask price for within any given collection. But that is a really poor indicator of what value is to start with, because, again, each token is unique. So many of them might actually be worth more than this lowest ask price. But also, only a very small percentage of all tokens are actually listed for sale. So it means the ask price is also just, a rough estimator, really, nothing more. And then finally, you can actually manipulate the ask price really well by just spoofing them. And that means that you end up with a market and a point of reference for what you think value is that might not actually be applicable. Because we see NFTs really becoming this sort of standardized sort of property record for any type of unique asset in the world long term, it is really important to have this transparent source of value for all unique assets that might end up having NFT counterparts. And our goal is really to develop that point of reference that anybody can rely on and basically build trust within this entire nascent ecosystem so that we can actually push forward and start looking at all of the positive ways in which it can eventually contribute to society. And that's really what you absolutely need valuations for.
Now, for the audience that's not so deeply steeped into the NFT valuation pricing kind of thing, why don't we start with some very simple definitions of what is a floor price, what is rarity, or what are the attributes that go into the valuation of a project, and what is the difference between valuation and pricing of an NFT?
Sorry if I already threw around a little bit of jargon, but indeed, so like a floor price is indeed if, they're within a collection, there can be thousands or 10,000s of tokens. And some of those are listed for sale. So people are wanting to actually sell these, and they will put a price on that basically tells others like, okay, this is what I'm expecting to receive for this. And the lowest ask price within that collection at any given moment in time, that is called the floor price.
Why is it the ask price? Is that ask price binding in any fashion? Can I not just ask for like $100 million for each token?
Yes, you could. You wouldn't sell it probably, but you could. And that is why the floor price is basically saying it's the lowest ask price of all tokens within the collection.
Okay, so the more illiquid a collection is, the more susceptible it is to manipulation with the floor price and the ask price.
Yeah.
Okay. Is there a connection between the last sold price, so the lowest sold price, versus the listing price?
Not formally, but in practice, there often is, for the simple reason that the largest number of tokens within a collection have values close to the floor price. These we call floor NFTs. And therefore, the last token to be sold is just most likely to be one of these low value tokens within the collection. And therefore, it will typically be close to the floor price. But it doesn't have to be that way. If there is a very precious token that happens to be worth a lot that gets sold, then obviously it's a lot higher. So then there is no correlation. So this really always needs to be solved on a case-by-case basis. A follow-on question that might be interested in segues into the next part of your question is what defines rarity, right? And why does that have an impact on value? And the reason is that most collections at the moment are actually kind of collectibles. And as a result, of course, something that deserves being collected is typically something that's rarer. And what often happens within a collection is you have different images or tokens that have different properties, different traits. And the biggest interest that people typically have in any individual token is when that token has properties that are very rare, that typically don't occur. So there are all kinds of variations, but if it's a funny picture of a monkey, to take Bored Apes as a sort of key example that's relatively well known, it can be related to what kind of hat the monkey is wearing, what kind of color, what type of fur it has, and so on. So these types of things then eventually end up factoring into rarity. The absence of a trait can also make a token very rare, for instance, just because it's the only one that doesn't wear glasses, just to give an arbitrary example. These are elements that are important, that actually end up contributing to value. And that's the key difference between pricing and valuing as well, is the prices in the end is what the market pays for it, but value is what the market should be paying for it. And this is also because often the market is not liquid, and it is hard to determine exactly for this specific token that in this example doesn't have glasses and has a very long fur and has a funny red hat. That token, like what type of value that has, for that you need to use all of this circumstantial information. So indeed, like what is the rarity? What is the current floor price? That of course is also important. But then, we combine that with all kinds of other things, like, indeed, the traits the token has, the complete market transaction history of the collection. And we basically build new, unique predictors of what the eventual value should be based on these. It's a major part of our IP to do that well, of course. And then we make these predictions. And we basically do that by feeding these data into our AI. And our AI is, I think, very uniquely set up for this purpose. So normally AI is a black box, right? You feed it some data, you get a prediction, but you don't really know why or where it comes from. We use explainable AI. And what that means is we're using advanced algorithms from game theory that allow you to track the data flow through the AI. And we arrive at a valuation, we can quantify exactly how each bit of input data contributed to that valuation. To give you an example, if we value a token at 10 ETH, we can say, well, 6 ETH of that is because this collection has been trading really well recently. And maybe another plus 7 ETH is because we're looking at a really rare token within this collection. But then maybe we lose 3 ETH because it has a funny background color that nobody likes. And that way we arrive at 10 ETH. And what that does is it completely takes away this black box and makes the entire valuation process completely transparent and accountable, really, and trustable. And that is so important going forward. And what we see is, if we look at how that combination of this sort of intelligent data engineering of what goes into the models, and then the explainable AI that allows us to tune and optimize the models very easily, if we see how well that does against the real market, then we're getting fantastic numbers, actually. So for every sale that happens, we compare the actual transaction price to our last predicted price just prior to that. And then we can see how many percent we're off. And like for the top collections over the last few months, our median absolute percent error, which is that sort of error indication, is between 1% and 5%. And this is absolutely market leading. And the idea that you can just predict the prices of such unique assets down to such a precision, that I think bodes really well for the future of this ecosystem. It means we can start to really establish this layer of trust that all kinds of other companies can build on. And that is, of course, in the end where we're going.
Let's now switch gears into what are some of the data problems that you guys have faced with building your models, obviously with the wash trading and just the lack of access to data. A good example here is listing data. Most listing data is behind proprietary APIs because they're not on chain. Like OpenSea, for example, my understanding is that the listing is off chain. It's only the purchase transactions that are on chain. So maybe let's just get a list of all of the data problems and data quality problems that you guys have had to solve in order to build your model, because garbage in is garbage out. So if your data is bad, then your valuation is bad.
Yeah, no, you're completely right, and it is a particularly interesting problem within these types of nascent ecosystems, right? Where a lot of the infrastructure needed for these types of things is being developed and finding their feet. And of course, Covalent is, of course, one of the fantastic platforms in that area that we've been very, very happy to partner with and use. So I think what you really want to achieve when you solve these types of problems is to achieve a state of redundancy in your data flows. That is the first thing that you need to accomplish, because in the end, you want this sort of 999 standard of being online 99.9% of the time. Once you do that, then at least you have a reliable infrastructure. And then it becomes important to make sure that the data are well organized and so on. So indeed, there is a lot of onboarding with indeed different data providers, interfacing with the blockchain to actually make sure that we get everything that we need. There is a huge amount of crosstalk between indeed data engineering, data science, and just hardcore tech departments that really need to be speaking the same language to realize this. And one of the couple of things we realized is that we really needed to have our own databases for all of this, put everything in the cloud. These are sort of industry standards that are very normal, that we're all basically satisfying. And by doing things that way, we've achieved sort of autonomous ecosystem through which we can guarantee that 999 availability. And by running these things automatically, we're now able to serve basically a huge market. And the nice thing too is it's extremely scalable. So over 99% of our processes are automated. We deliver our valuations and product offering with a coverage of over 22,000 collections, pricing over 65 million tokens. We now offer that through an online dashboard and through an API. And the availability of our API is fantastic. It's basically there all the time. And we've got dozens of customers using it. They're calling it up to over millions of times per day. That infrastructure is extremely scalable, such that when somebody calls like a specific token, wants to say, okay, what is your current valuation for this token? Or what are these value drivers for this token? What I mentioned before is we can actually identify exactly what sets the value. Whenever somebody makes such a call for a token that's not part of our database yet, it all automatically gets added to the queue. And within a few minutes, it's actually been valued and it's available for the customer. So we're looking at the type of infrastructure that is really ready to sort of serve the market at scale. And I think establishing that has been a major accomplishment for the company, but at the same time, it's also been absolutely critical to be able to get where we want to be going. So I think on the tech side, I think this has really been a tour de force. And I'm glad that we're now at this point where we can actually indeed start building all kinds of exciting products on top of that infrastructure.
Okay, let's talk about some of the use cases of NFT valuations. Why, if you were to rank the top problems that require accurate pricing, by accurate pricing, I mean the customers are willing to pay a premium as opposed to just go to OpenSea and look at the floor price, which is, I guess, how most retail does their taxes, for example. They just look at the floor price, they look at the sold price, the purchase price, and then they can get their unrealized gains. What is some of the use cases where this kind of valuation is critical? It's a premium offering.
I would say there are three growth areas that we have identified so far and been pushing into quite actively. The first one is this NFT-Fi side, right? The kind of protocols which are building financial services on top of NFTs, and these are really projects that do lending, they do insurance, they do options, futures, and financial derivatives on chain. And so those guys need very accurate valuations in order, again, to build effective financial services. But of course, there are lots of funds as well that are investing into NFTs. Obviously, we have the retail side, but also there are hedge funds with, billions of dollars who separate a small amount, $50 to $100 million, and they start investing into different NFT asset classes like metaverse and game assets, PFPs, and whatnot. And so we're helping these funds to understand the fair market value of these assets, which is really important as they need to do quarterly, sometimes monthly reporting to their LPs. They are getting audited. And so it's very important whenever you're getting audited, for example, to be able to justify why you value portfolio at a certain valuation. And now that we're talking about audits, it's going into our third growth area, which is more of the regulated side. And I'm sure you are also following very closely the markets, and there are lots of things happening around regulations across the globe. So in Singapore last year, at the end of the year, crypto assets and NFTs actually became property within the country. Around a month ago, or maybe that was even 2 weeks ago, the FASB, the Financial Accounting Standards Board in the US, they drafted an update where they said that if you're a company and you have crypto assets on your balance sheet, you should actually account them through fair market value. Now, NFTs were excluded at this point in time, but it's certain that those assets will also be included soon, and you will have to account them through fair market value, which is impossible without actually knowing the kind of value and that those providing and receiving those kind of insights that we are providing through Nabu. So whenever we're talking about regulations, it's audit, it's tax, it's accounting, and that is another market that we have been pushing very actively. And I think in order to understand some additional use cases for this, we have to think a bit about the future as well, because most of the NFTs that are out there today and more popular, the majority of them are PFPs, right? Profile pictures, but that's definitely not NFTs will flower and flourish in the future. It's going to be so much more. And you can already see that happening today. There's a reason why Nike, Adidas, and major apparel companies are minting NFTs for the apparel. And of course, on one hand is to participate in this coolness effect of NFTs, but also it's a really, really good way to prevent fraud and make sure that, the apparel that you're owning and there's an NFT on it, that's actually a authenticated real apparel. And that you can also see with luxury watch companies and lots of other companies moving in that direction. If we look at other trillion-dollar industries like the pharma industry, we see pharma businesses who are minting an NFT for every box of pill that they produce. And the simple reason for that is the blockchain is a very effective methodology to actually track all the ingredients, all the supplies that go into a pill, and again, prevent fraud to purchase fraudulent pills on the black market. There are all sorts of use cases which we see in the logistics industry, real estate is being tokenized. And we truly believe that in the future, most real world assets will be tokenized and will be available on chain. And our goal and vision is really to become this mass valuation layer for all tokenized assets. And so we're constantly in touch with companies that are pioneering tokenization in the space to understand how valuation is important to that, how we can actually increase transparency through our product, and how we can help the mass adoption of the space by providing clear and understandable valuations.
Incredible. One of the use cases, I think it's still far out there, which would be perfect for Nabu, is tokenization of accounts receivable and accounts payable. And right now, if you look at the invoicing process, it's still an analog process. You still have a roll number. Yes, it's a PDF, but it's still analog. And if this was truly digitally native, then what you can do is you can bundle every line item on your invoice or your receivables and package them and then sell them or put them down as collateral for something else. And there's lots of very interesting things you can do if this were composable. And I think what you guys will do is play a very critical role in that future. So let's talk about the future. Let's talk what's in store for the next 6 months, what's in store over the next, let's say, 3 to 5 years.
So within the space at large, I'll comment on that first, and I think exactly Nabu's role within that I'll get to after that, because I think it's important to set that context a little bit. And within the space, as Timur mentioned, is we're going well beyond this idea that NFTs are just profile pictures, and we're seeing a huge growth of use cases. Probably at first, initially more and more emphasis on these sort of gaming and metaverse assets. But already the integration of real world assets is starting to pick up very rapidly. And as we go to this sort of future where all unique assets are going to be on chain, and by that, I really mean unique digital assets as well as unique real world assets, it's really important to lay out an infrastructure that makes a huge positive contribution to society, right? We have actually within this ecosystem, we have a huge responsibility to do that well, because up till now, we can all have all kinds of critiques of the analog world, but we're here, it's been functioning reasonably well so far. But the moment you build this entire digital economy, you need to take stock and be careful about how you do this and make sure that everything is there to do that well, because new technology is disruptive and can make this positive contribution to society. All the use cases that Timur mentioned, like inventory tracking and fraud prevention, but also things like cradle to cradle or sustainability or data NFTs. All of these types of use cases are starting to become increasingly important over the next couple of years. The thing is, with the whole blockchain and NFT ecosystem, you could start rolling out these types of applications right now. And I think there are positive contributions there, but you need to be really careful that all the technology is ready, right? If we roll all of that now, I see, for instance, there are huge privacy concerns if you roll out all of that technology and integrate it with our lives right now. So, maybe we need to look more into, as a community, into like, okay, how do zero knowledge proofs come in? How can we build this entire ecosystem to make sure that it doesn't just sort of provide the corporate positive contribution, but really for everybody who's involved in it, and to make sure that basic privacy laws and trust are honored in every way possible. And what our role is within that future is really to provide that basis of trust where everybody knows what the value is of an item if they're engaging in any form of transaction or even just a basic valuation. And our way of getting there is stepping through these asset classes and expanding into them one by one. And the interesting thing is that with our infrastructure, we've really developed an efficient mechanism to very quickly become market leading in terms of accuracy and data transparency and so on. And it turns out it's extremely transferable. So for us, this is a natural sort of growth trajectory that as the space grows, we will grow along with that.
To the second part of the question, what is the roadmap like for the next 3 to 6 months?
We're basically looking to expand, right? And we've become the market leader in valuing profile pictures. We're looking to expand into other asset classes that we believe are going to be taking up pace over the next year or so. As part of that, we are absolutely expanding into new blockchains. We originally started on Ethereum. We're now actually also starting to value tokens on Polygon. And this is a continuous process where we're basically expanding into these new areas. At the same time, our extremely accurate valuations have allowed us to start building all kinds of additional data products on top of these valuations. For that, it's really important to have that market leading accuracy, because it's one thing to say like, oh, I've got like a few percent uncertainty or error on the typical prediction. But the moment that you produce sort of derived data products, that error always blows up. So in order to keep that reasonable, you need to start super precise. And that is why now that we have that market leading accuracy, we've started to say like, okay, how can we transform and professionalize the data standard in this space to really enable our customers to have an edge relative to any other player? And as part of that, one product that we launched, we call True Floor Value. So I mentioned this floor price earlier, right? Where the floor price is just the lowest ask, but it can easily be manipulated, and it's just a very rough estimator of what the actual floor price is. The true floor value is trying to answer the question, what would the floor price be if all tokens in a collection were listed? Like how in the ideal world could I get into a collection? And that's important for all kinds of applications, for instance, in NFT-Fi, because that tells you basically what the tail end is of your risk. If I decide, okay, I'm going to lend out this token, then I want to know, like, what is the lowest that the floor price could go to be able to set liquidation levels and so on. But that's just one example. Like our vision of this goes much further, and you're undoubtedly very familiar, and many of the listeners and viewers might be too, with Glassnode. Glassnode is this sort of on-chain data analytics company that in traditional crypto specifically started with Bitcoin, really looked on-chain into how are the holders of this token, how are they doing in terms of their profit and their loss and so on. Has there been a lot of market volatility? Could we expect market volatility? Are we in a hype or in a value zone? Where's the smart money going? These types of questions are answered for traditional crypto assets. But for NFTs, it was unthinkable that we would be able to answer these questions because each NFT is unique. They're illiquid. They sit in a wallet for a long time. So we don't know what their value is. But now that we have valuations of all tokens in a collection at any moment in time, exactly the type of data that I just mentioned that provide insight into how token holders in a collection are doing, and if you might expect a bull run or a bear dip, that type of information we're actually now providing through our customers in the form of these deep data analytics. That's totally professionalizing the portfolio management that is possible within the NFT ecosystem. And for that reason, I would say that's actually a little bit of alpha that I just dropped here. I think anybody viewing should definitely check it out, because what happens here is people using it will have an advantage and the market corrects for that very quickly. And it is something that is basically becoming a new standard. And that's how we think about these types of things, is how can we push the standard to the professional level that I think we need in order to interface with the entire world at scale at some point.
I'm almost wondering is, I don't know if you guys have this, but a public dashboard that shows the valuations of these collections that come from your engine versus something that you would see on OpenSea or any of these other services. At least it gives people an opportunity to visually inspect the divergence. Is there something like this in the works or something you have ready today?
Yeah, we actually indeed. So next to our API, we have a dashboard where somebody can connect their wallet, and then you get valuations for the tokens in your wallet. You can check it out token by token. You get a view of what these value drivers are, so where the valuation of that token comes from, if it's related to recent trades or to rarity or so on. And at the same time, you see, for instance, what the last sale was on OpenSea or any other marketplace within this collection. You see what the floor price is. You see a nice overview of how the valuation of this token compares to the lowest and the highest sale over the past period of time. So these types of insights are actually available right now. If people want to try out our platform, then they're very welcome to.
I guess in terms of like closing thoughts, it's again, just to echo what we've been talking about before, we are super excited where the NFT space is heading. Of course, there is a bit of a bear market at the moment, although there are some movements already in the game and metaverse space. And I think there will be quite a bump in trading and also users towards the end of the year, specifically in this area. But we're really excited to see how NFTs are really becoming this mass utilized kind of tokenized version of real world assets and digital assets as well. I think, the upcoming 5 to 10 years, it's going to be truly economy changing in many of the areas and industries which are more traditional and conservative today.
We need to picture the developments that we're witnessing today as unlocking all kinds of new applications that we haven't even thought of. And that is, on the one hand, is extremely exciting because it means that really our imagination is the limit, and probably that might not even be the limit. At the same time, it also comes with the great responsibility that I mentioned, that we actually need to be very conscientious and aware of how we want to be shaping that future. And as a community, that is where we're going. And I think also as anybody who's not part of the Web3 ecosystem right now, it is really worth to start thinking about what you think that might be able to do for you in the future, how you would want that future to look like, and think about how it is possible to start interfacing with these types of applications going forward. And I think what you'll see is that Nabu will be around in the long run to provide valuation for you as you go.
Incredible. Okay, Timur and Diederik, thank you so much for your very insightful thoughts and sharing them with our audience. And have a great day. That comes we come to a close here. Thanks a lot.
Thanks for having us.
Thank you.